from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Coinbase and the SEC come to blows. The regulator threatens to sue the exchange if Coinbase allows users to earn interest on their digital assets. Coinbase CEO Brian Armstrong calls the SEC's approach sketchy and says they're using intimidation tactics. We'll break down the evolving battle royale. Plus, Elizabeth Holmes is officially on trial. She could face up to 20 years in prison if convicted on fraud and conspiracy charges. We will take you to the courthouse live on day one. And a moment of truth for Reddit favorite Gamestop. We break down GME's quarterly results and find out whether activist investor Ryan Cohen is delivering on his long-awaited turnaround strategy. All that in a moment, but first let's get a look at the markets and Bloomberg's Vildana Harjic. Vildana, take it away.
Emily, it was another big risk-off day for the major indices. You had the S&P 500 down for the third straight day. That's a stretch of losses we haven't seen it post since mid-July. And you had a lot of investors warning that this was going to be a really seasonally challenging period, that September was going to be a really rocky month for markets, for equities, and that's exactly what you're seeing playing out this week. You had even big tech down today, as well as the Russell 2000 index of smaller companies down more than 1%. And another big area of underperformance are cryptocurrencies. If you remember back to yesterday, Bitcoin was down as much as 17% at one point, and it really continued that underperformance today, down about 2% today, hovering around the $46,000 mark. And then the big crypto-centric area, as you just mentioned, that's been in focus today is Coinbase. Shares closed lower by about 3% today, and that's after the SEC approached Coinbase. We heard from Coinbase's CEO today saying that the SEC was looking into some of the lending products that Coinbase was hoping to offer in the next couple of weeks. And so we have shares lower for the day today, Emily.
All right, Vildana, thank you so much for that update. For more reaction on the SEC versus Coinbase and what it means for the crypto industry at large, I want to bring in the leader of another burgeoning crypto platform, the crypto derivatives exchange FTX, CEO Sam Bankman-Fried, with us now. So, Sam, setting the stage here, the SEC threatening to sue Coinbase over these lending practices. Brian Armstrong out with a lengthy tweet storm calling the SEC's approach sketchy, saying they're using intimidation tactics. As a leader of another major crypto platform, what's your take on this?
Yeah, I mean, it's tough because obviously we don't see what happens behind the scenes in that conversation, and we've obviously only seen one side of it. I can say that everyone in the industry would love more regulatory clarity on some points, and I do think that's a note that you heard expressed there, and that you're going to hear expressed from a lot of players. On the other hand, I think that there's a lot of frustration from regulators on what they see as, an industry that has had some non-cooperative players, although I don't think you would generally include Coinbase amongst the ranks. I certainly can see the frustration from Brian's perspective, given his sort of tweets, but also, I say that without having actually been a part of any of those conversations, and, stories can always look different from the other side.
I want to take a walk through some of Armstrong's tweets here. He says some really sketchy behavior coming out of the SEC, but in this case, they're refusing to offer any opinion in writing to the industry on what should be allowed and why, and instead are engaging in intimidation tactics behind closed doors. Our door remains open. Hopefully, the SEC steps up to create the clarity this industry deserves without harming consumers and companies in the process. Earning interest on savings is pretty textbook, but are crypto platforms trying to recreate traditional banking without the regulation of traditional banking?
It's a good question. I mean, it depends on the structure of the products. And I think what you've seen in crypto has been a real scale of different things. And I think that especially when you start to look at things like DeFi yield, and ask, like, where does that fit into the regulatory regime? You can look at a lot of other products which have some relationships to existing sort of regulatory structures, but aren't perfect analogs for them. And I think that can make it tricky for industry and regulators alike to decide what the right interpretation of some of these are. And I think that often it gets down to the details of exactly how these things are structured. Um, and I think that that there's sort of a lot of different phrasings here, right? You can phrase this as a bond-like product. You could phrase it as staking, as yield. You could phrase it as a loan. You could phrase it as something totally different. I don't know what's going on under the hood there, and I don't know what those conversations included. But I think that the SEC's approach, at least as it was sort of quoted here, matches I think some of what we've seen, which is that rather than sort of saying, look, here's sort of like we're going to lay out all of our thoughts on this topic. Here's sort of an essay about what you do see from some regulators. I think, like in Singapore, you've seen MAS sort of writing pretty sort of explicit guidelines and thoughts about what they know, what they don't know, what they're thinking about. I think the approach from the SEC has been more about, look, here's the laws. We're just interpreting the laws. It's not up to us to explain to you how to interpret the laws, but we're interpreting them, and here's our interpretation of them. Here's how it pans out. And as opposed to wanting to get into details of what their thought process was that got them there.
Meantime, you have celebrities jumping into the crypto game and asking Twitter for help, including Steph Curry, who asked for advice from his Twitter community about getting into the crypto game. Steph Curry is now a brand ambassador, has a share in your exchange, FTX. Tom Brady responded to Curry there, whatever you do, don't laser eyes. What does this kind of celebrity promotion get FTX? Brady is also a brand ambassador for you.
Yeah, if you look at our history, we have, and I think comparing to Coinbase, which you were just talking about, we have about 4 times the daily trading volume that Coinbase has, but they have about 30 times the user base size that we do. It's a pretty stark difference, and it's a reflection of the differences in the approaches and products that we have, where Coinbase has very much been sort of the leader in Western retail products for crypto. It's been sort of the leader by a very wide margin. And FTX has historically had a lot more sort of professional users on it, more institutional users, or at least more institutional volume, and a lot less of a footprint in terms of the broad base of consumers. We're trying to branch out. We're trying to really increase our footprint, and sort of reach some of the people who are maybe learning about crypto for the first time now. And I think a lot of what we're thinking is, like, what can we do that is sort of highly engaging and powerful and can reach tens of millions of users without diluting our brand? I don't think there are a lot of people in the world who kind of clearly fit that, but I think Tom and Steph are 2 of them. And I think we've been really excited working with them because they've been excited about this too. They're great guys, and they're engaged, and that makes us a lot a lot more jazzed for it.
Meantime, Reese Witherspoon tweeting that she bought Ethereum for the first time. Kim Kardashian, though, getting slammed for promoting Ethereum Max. I mean, clearly you've got, just everybody trying to understand what's going on here. I wonder if there are downsides to celebrities jumping on the bandwagons when there still isn't a lot of clarity.
I think one thing that we've seen, which frankly I think we've appreciated, has been that, especially when we've talked to people like Steph Curry, like Tom Brady, they've done a lot of diligence on us. It's not like we called them up and we're like, hey, we got some money, you want to send a sketchy tweet, and they're like all over it. Like, that's absolutely not what's happening, But I do think that, especially, 2017, you saw some things that looked distressingly like that, and I think those didn't end so well. But I think that what we've really seen with some of the partners that we value the most is they've done a lot of diligence on us. We've had many calls. They've talked to a lot of our partners, a lot of their partners. They've done a deep dive into our business, into how we operate. And I think that you'll hear again and again from them is the most important thing to them is that they feel good about the companies that they're working with. And I think that it's important to us as well that they feel that way and that they can represent that. So I think what's important is that, when you do start to see, celebrities getting in, that they're forthright and that they really do their homework.
FTX CEO Sam Bankman-Fried, thanks so much for joining us. We'll see how that continues to play out. Okay, coming up, the trial of Theranos founder Elizabeth Holmes begins. We're going to get you a live update from the courthouse as the prosecution and the defense state their case. And let's take a quick look at GameStop shares falling in extended trade. The video game retailer and meme stock favorite reporting a second quarter loss, wider than Wall Street projections. We're going to have more on this a bit later in the show. This is Bloomberg. The criminal trial of Theranos founder Elizabeth Holmes has officially begun. Holmes faces federal charges of defrauding patients and investors with claims of revolutionary blood testing technology. At one point, Theranos was valued at more than $9 billion before suspicion was aroused. Bloomberg's Ed Ludlow is live outside the courthouse in San Jose, California. Ed, walk us through day one, the prosecution laying out their case.
Yeah, the prosecution was more brief than the defense, but they said very simply this was about lying and cheating, that they had documentary evidence in the form of text messages, emails, and witnesses that would prove that Elizabeth Holmes was aware with the issues of the technology that Theranos had and the impacts, the negative impacts that the testing brought to various customers. You know, they gave an example of a false case of pregnancy from somebody that had done one of the Theranos tests, another that gave a false diagnosis of HIV, for example. And, you know, they said very squarely that there were two separate schemes, one to defraud investors out of money because the company had run out of funds and was late in bringing their products to market, and the other to defraud the doctors and customers that were using the service itself.
What about the defense? Where have they focused? Have they laid out an argument for psychological abuse from her business partner, Sunny Balwani, that we thought was coming?
This was much more interesting. They leaned very heavily on the basic idea that Elizabeth Holmes genuinely believed in Theranos' technology. She genuinely believed in the company's mission statement to lower the price of blood testing, laboratory testing. And ultimately, just because the company had failed, that didn't amount to a crime. They did make some concessions along the way that she was not technically qualified to run the lab. She should have brought somebody who was in sooner. But as I said, you know, they didn't directly respond to the documentary evidence the prosecution said it had. On Sunny Balwani, they did address the issue in kind. They said that they would discuss later in the trial his character, a side of his personality that people may not know, but they did not explicitly allege any psychological abuse towards Elizabeth Holmes or any manipulation of Elizabeth Holmes, which, you know, going into this trial had been reported they might do, and that what the defense might argue was that she wasn't capable of intent to defraud because she was under the control of someone else, in this case, Sunny Balwani, and of course, Sunny Balwani firmly denies those allegations.
All right, Ed Ludlow live outside the courthouse in San Jose. We're looking at folks starting to make their exit there. Elizabeth Holmes may be leaving at any moment. I want to stick with this story and bring in Bloomberg Opinion's Tim O'Brien, who wrote a piece about what he expects to hear from Elizabeth Holmes. And interestingly, Tim, her defense has talked about reality being far more boring than the story you read in Bad Blood or the newspapers. You know, what are you expecting to hear in this case as it plays out over the next few months?
Well, you know, her defense has a steep hill to climb if that's the argument they're going to make, Emily, because what's going to be at battle in this courtroom is, did she know what she was doing or didn't she? And the prosecutors, I don't think, would have come this far if they didn't feel like they had a preponderance of evidence demonstrating that. Perhaps they won't. Perhaps it'll go in another direction in the courtroom. But I will assume that they've got evidentiary material that shows exactly what she was thinking at different points in time when Theranos and Holmes were making claims for its blood testing product that were wildly in opposition to what it could actually do. That may take the form of email, it may take the form of witness testimony from advisors of the company, from employees at the company, from outside investors. But that's really where the rubber will meet the road here. And her defense attorneys will obviously say that she was a zealous and passionate advocate for a product she believed in. And while she may have exaggerated things, she never knowingly misrepresented anything. And that's really what both sides have to accomplish in terms of a jury convincing a jury that she committed a crime. It's all about intent.
You know, of course, we've been waiting potentially for her defense to lay out this argument of her facing psychological abuse from her business partner, her ex-boyfriend, Sunny Balwani. If that happens, she could take this stand herself, which would be a pretty significant moment. You know, the stakes are very high here. If Elizabeth Holmes takes the stand, what does she have to prove?
Again, she's going to have to prove that she didn't act with intent to mislead patients, investors, and business partners, all of whom were severely damaged by what occurred at Theranos. You know, Elizabeth Holmes and her company blew through $600 million of other people's money. People's health was affected by it. Partners' business prospects were affected by this, and obviously investors lost money. I think when she takes the stand, obviously her own credibility is going to be at stake here. I think the argument that she was so psychologically damaged and abused by Sunny Balwani that she didn't know right from wrong is also a steep hill for them to climb. I think how she comports herself on the witness stand, the tone, her famous voice that has often entered different registers from time to time, is going to have an impact on this jury. There's a real risk here for her sitting in front of a jury, and I'm not convinced yet that her defense attorneys are going to let her do that. But if they do, it's going to be obviously a pivotal moment.
Tim, you know, what's also interesting is that the journalist who blew the lid off of Theranos, John Carreyrou, he was on our show yesterday. He wrote the original investigation in the Wall Street Journal of Theranos back in 2015. He's also on the potential witness list, and he believes that, you know, if he is called, that part of the defense's argument will be to turn the table on her accusers, to say that this was a witch hunt. What do you make of that argument?
Well, we've heard witch hunt a lot in terms of different people defending themselves over the last several years, including the former president of the United States. People can claim whatever they want about the intention of prosecutors, Emily, but at the end of the day, in a courtroom, it's going to come down to cold, hard evidence. If you put in front of a jury explicit evidence that shows Elizabeth Holmes actively and knowingly misled investors and partners and ultimately patients, that's going to be a very damning outcome. And simply saying that the prosecutors are on a witch hunt won't obliviate any of that.
All right, Tim O'Brien of Bloomberg Opinion. This is going to be a long trial, 3 months of this, and we will be talking about it every step of the way. Tim, thanks so much for your insight there. Coming up, we speak to Daniel Dines, CEO of automation software company UiPath, about the company's latest results and the future of robots post-pandemic. This is Bloomberg. After going public last April, automation software company UiPath reported strong earnings as second quarter revenue beat the highest estimate. Joining us now, UiPath CEO Daniel Dines. Daniel, great to have you back with us. So look, since going public, the pandemic has dragged on. That has, I assume, continued to accelerate the pace of automation. What trends are you seeing, and how is that impacting where you're investing?
Hi, Emily. Thank you for having me again. Of course, we have hoped that COVID will be shorter-lived, but we have adapted to this new way of doing business. We continue to help our customers, especially in the healthcare sector and the public sector, cope with the extended threat of COVID. We are seeing really good momentum for our business across all sectors. I think everything is picking up quite nicely, and we are heading into a great H2 and a very good next year.
One of your taglines is a robot for every person, and some folks really fear the rise of the machines. That sounds terrifying. What's your take on the fear out there?
Well, on the contrary, I believe the robot will be our best friend. I think all of us have a lot of routine, manual tasks that we are doing as part of a job every day. So the robot will just take over these type of tasks. So nobody has to fear about it. Actually, the robot will improve productivity. It's gonna improve the well-being of person. And I think overall, the robots are gonna really improve the prospect of our society for a longer term.
So, talk to us about the tailwinds from the pandemic, and whether or not that will continue when the pandemic is over. Do you see companies? Do you see customers hitting the brakes on accelerating their technology, and does that mean a potential slowdown ahead?
Well, the pandemic for sure increased the awareness of digital transformation, maybe 10 times compared to before the pandemic. On the same time, customers might have different urgent priorities this very moment. But on the longer term, few quarters down the road, we are seeing a really big increase in the demand for digital transformation.
All right, Daniel Dines of UiPath, appreciate you taking the time to join us. Thanks so much for stopping by.
Thank you.
Still ahead. Buy the dip fatigue. Retail traders using the phrase to rally support on social media when their investments sink. But will it continue to work? This is the most talked about meme stock of all, Gamestop, falling after hours on its latest earnings report. We're going to break that down next with a key expert who's been following the company. Is Ryan Cohen's turnaround strategy delivering? That is next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. This past year, 3 words have ricocheted across social media anytime a meme asset slumps. AMC shares in free fall? Buy the dip, Redditors insist. Crypto taking a slide. Cue a flock of buy the dip tweets. A celebrity SPAC spiraling downward? You get the point. GameStop, one of the original meme stocks, reported after the bell, sending shares down. But the question becomes, do people still want to buy the dip? Let's bring in Bloomberg's Vildana Hadrick for more. Vildana, walk us through the meme moves of the day and GameStop.
Emily, as you said, we are looking at the original meme stock. Shares of GameStop are down in after-hours trading after the company reported a wider than expected loss for its second quarter. And if you take a big step back and look at the year-to-date picture, I actually want to give us a little bit of perspective. Shares for GameStop are up around 900% year-to-date. That's despite all the volatility that we've seen from the company and its share performance so far this year. And it's true actually for a lot of other meme stocks as well. Shares of AMC are up some 2,000% year-to-date. And shares for Express, Cost, other meme stocks, shares of Express and Cost up around 400% each. And then compare that to what's been happening with the broader stock market. The S&P 500 is up around 20% year to date. Ask any analyst about that return, they'll tell you it's been a really great year for the stock market so far. But then compare it to the Bloomberg index that we have of those 50 stocks that Robinhood had restricted at the start of the year. That index is up some 70% year to date, so it's handily outperforming the S&P 500, Emily.
All right, Vildana, thanks so much. I want to dig deeper now on GameStop. Again, shares falling in late trading after reporting a second quarter loss. Loop Capital's Anthony Chikumba with us to discuss. He's followed the company for a very long time. And Anthony, sales actually beating estimates, but again, these losses that we're seeing, Ryan Cohen coming in with new management. Do you see him at all delivering here on the promises that he's made?
No, not at all. Not at all. I mean, look, to be fair, sales were better than expected, and they did have some software sales growth. So that was encouraging to see. But they continue to lose money hand over fist, and they lost more money than was expected. So, I just don't see, I mean, look, he's a very smart guy. He's got at least 3 more zeros in his net worth than I do. He sold, Chewy to PetSmart for a bunch of money. But I still have not seen a shred of evidence that he has what it takes to turn this business around. And these numbers did not change that in any way, shape, or form.
GameStop shares down almost 8% after the close. Last price, $184. Look, let's look at the chart here. $347 a share at the high, $18 at the start of the year. Where do you think GameStop should be trading?
Well, just to correct you, remember the intraday high is $483. I continue to believe that this stock is wildly overvalued. My last price target on GameStop was $10 a share. I tell people that, and they look at me like I'm crazy. But look, at the end of the day, in the near term, the stock market is a voting machine. In the long term, it's a weighing machine. In the long term, the valuations of these stocks have to reflect the fundamentals. So it's not about memes, it's not about YOLO, it's not about diamond hands, it's about the fundamentals of these companies, and the fundamentals of GameStop do not justify anything close to this $14-15 billion valuation.
So here's my question, whether it's GameStop or AMC or, Bitcoin over the last 24 hours, whenever a stock slides, you've got these folks out there, whoever they are, whether it's Redditors or retail investors, or even the president of El Salvador saying, buy the dip. Do you think investors, the folks holding these shares, are really going to keep the faith, keep buying that dip?
I mean, I think it's kind of hard to say. I mean, look, I think one of the problems with these meme stocks is that you don't, in a lot of cases, you really don't have institutional investors that are, who are driving these stock price moves. People who've really kind of done the work and really understand these companies that have done the valuation work. You have a lot of these individual investors, and it seems like they go from one fad to the next, right? One day it's GameStop, next day it's AMC, next day it's Bitcoin, next day it's Dogecoin, next day it's BlackBerry, and there's just no kind of fundamental basis behind any of this. It's memes. It's just, I mean, that's why I continue to just come back to, it just doesn't make a lot of sense on the fundamentals. And so, it wouldn't surprise me if at some point a lot of these guys sort of give up and go on to the next thing, whether that's gambling on sports or investing in Bitcoin.
All right, Anthony Chukumba of Loop Capital there. Thanks so much for joining us, and please excuse some of those audio issues, but always appreciate hearing what Anthony has to say. Meantime, the NFL season kicks off this Thursday when reigning Super Bowl champ Tampa Bay Buccaneers host the Dallas Cowboys in Florida. It also kicks off a big season of sports betting. The American Gaming Association estimates more than 45 million Americans plan to bet on the sport during the season. The industry has already been enjoying a surge in growth since the onset of the pandemic. President and interim CEO of FanDuel, Amy House, spoke to my colleagues Amanda Lang and Matt Miller earlier about the upcoming season.
Yeah, it's critically important. Listen, we're incredibly excited about this NFL season in particular. As FanDuel is America's #1 sportsbook, it's the first year of our official partnership with the NFL. And there's a few big cornerstones to that program. First, we're really elevating our game this year, right? We partnered with, we think, one of the best agencies out there, Whedon and Kennedy. We have a national ad campaign called Every Moment, and it's really about amplifying those great moments for the sports betting consumer, right? The generous pregame offers to showing our live betting product integrated into the broadcast. So that's going to be one, differentiator that you haven't seen in the past. But we're also going to have an opportunity to integrate NFL highlights directly into the app so that we can keep that NFL fan connected to those exciting betting moments. And to your point on the media partnerships, this year we have the opportunity to partner up with many of our great media partners like CBS to develop great free-to-play games. So even if you're in one of the states that sports betting hasn't been legalized, you have an opportunity to play high-low. These are great games, easy to access, and any fan could win $1 million. So that partnership with the NFL and those partnerships with the media and many of our agencies are really important to differentiating.
How about a partnership with ESPN? How strong is that brand in American sports?
Listen, ESPN obviously is widely recognized in sports. We're always looking at who we should be partnering with, and certainly something that we'll take a look at, but premature to comment on that.
We definitely see the size of the estimates of the potential for this market across the U.S. Going higher and higher. As it gets crowded, how much worry do you have about the competitive landscape out there?
Yeah, there's no doubt. It's it is as you said, this is a very fast-growing market right now. It is an intense competitive landscape right now, but we have had the benefit of having great scale advantage that some of the other operators haven't. So we're continuing to stay focused on making sure that we invest in the best innovative product. We have not just sports betting, but we're also in iGaming and fantasy sports and horse racing. So continuing to innovate in every one of those verticals is a really important part of our mission.
Amy Howe there, president and interim CEO of FanDuel, speaking about the upcoming NFL season. She kept relatively tight-lipped about ESPN's potential plans to expand into sports betting, but we're going to find out a little bit more. Hopefully Thursday, we're going to speak exclusively to Jimmy Pitaro, chair of ESPN and sports content at Disney, talking about all the deals they've struck over the last year as this NFL season kicks off. You can catch that interview live at 1:30 p.m. Wall Street time, 10:30 a.m. here on the West Coast. And Elizabeth Holmes has now officially left the courthouse in San Jose, this on day one of her criminal trial. We're told that this trial will continue for several months. Court will be in session about 3 days a week. We're going to be covering it live every step of the way. Elizabeth Holmes there, leaving court. Coming up, green investing. We're going to speak with Elemental Accelerator founder and CEO Don Lippert on its new tech venture and how it plans to tackle the challenges of climate change. That's next. This is Bloomberg. Investment in climate change is on the rise, and with that, Elemental Accelerator is spinning out a new venture capital fund launched to support entrepreneurs tackling the toughest climate challenges. Joining us now, Don Lippert, founding partner of Earthshot Ventures and founder and CEO of Elemental Accelerator. She's our guest in this week's City Lab segment. So what are you looking for in terms of the top areas that need innovation and investment when it comes to climate and really, stopping this problem before it gets before it turns into a disaster?
Absolutely. Well, thanks so much for having me, Emily. It's a pleasure to be here. I mean, there's so many areas within climate that need investment. So we're really excited about areas that blend typical sort of climate experience with new technologies. So think about materials science plus artificial intelligence, or software meets forest science or water solutions. So at Earthshot, we have some really exciting technologies, and we're seeing an amazing influx of talent from traditional technology like Google and Facebook, meeting up with people who really know energy markets, water markets, and mobility, and building some really fascinating companies.
So climate investments often take a long time to play out. I mean, we've seen some investors get impatient and move on to other things. How patient are you willing to be? How long-term is your time horizon?
Well, it's interesting you asked that. I mean, I think the market has also just changed so dramatically in climate tech and early stage climate investing in particular. So we're seeing a lot of momentum and interest in climate technology, and the speed of innovation actually picking up pretty significantly. I think there are really three key trends driving this. I mean, we're seeing enormous market interest. So thousands of corporations now have actually made net zero pledges and are buying climate technology. That's a huge change in the private sector. We're seeing alignment from the policy space, all the way from local, state, national, and international alignment around climate. And we're also just seeing this influx of talent where people are seeing climate actually affect them in their backyards and affect them where they are. And so a lot of new talent coming into the space. And all of these factors together are actually accelerating times to market and accelerating technology's ability to scale much more so than we've seen in the last decade or so that I've been investing in climate technology.
Some of your LPs include John Doerr of Kleiner Perkins, Chris Cox, the Chief Product Officer at Facebook, Emerson Collective, which is, of course, the fund started by Lorraine Powell Jobs. What kind of conversations have you had with folks like Lorraine about their priorities?
I mean, we're fortunate to have really a dream team of investors in this fund who have a lot of experience with sort of both investing and climate, and also working at the community level to deploy technologies in ways that are meaningful and can enable them to scale. Our investors are particularly interested in how do we find founders and entrepreneurs who may have been overlooked, who are doing some really interesting things, but may not have had a chance or had access to the same venture capital markets as others. It's something we're really known for at Elemental, is being able to find entrepreneurs from some of these really interesting communities who are really focused on solving climate in a more equitable way. So our investors are really excited about finding entrepreneurs in unexpected places and then addressing climate in a way that is more equitable. We see climate change and social equity as completely interlinked and interdependent, part of the same challenge.
Regulators in the United States and Europe are looking closely at ESG portfolios. We're also expecting some action from the SEC on this. I recently interviewed Al Gore, and he raised the concern about greenwashing. What's your take on greenwashing when it comes to climate investing? How big a challenge is this?
Yeah, I think Al Gore is right. I mean, greenwashing is a real challenge, especially from companies that are traditionally in fossil fuel sectors. I think the best antidote to greenwashing is action and really good solutions that are better than the solutions we see out there now using fossil fuels. I think solar is a great example. It's a better technology. It's cleaner, it's cheaper, it makes more sense than the fossil fuel alternative. Same thing is true with electric buses. We were an investor in electric truck and electric bus companies in the past at Elemental, and these technologies are just better than the alternatives. So, greenwashing is definitely a challenge. I think to the extent that we are creating better technologies that actually solve problems, are more enjoyable to drive, are better for our communities, we can accelerate the pace of adoption even so.
Meantime, your fund is partly based in Hawaii. You are based in Honolulu. I'm from Hawaii. So I have to ask, does being in Hawaii give you some sort of edge or a more unique perspective than an investor in the middle of Silicon Valley?
Yeah, well, we are here from your hometown, so aloha. So I think being in Hawaii gives us the two different advantages. One is that we actually see the impact of technologies in communities in real time. So Elemental started in Hawaii and is now a global organization. Earthshot will be investing across the US and across the world. So we're by no means limited, but it does give us unique perspective into what does it actually take to deploy technologies and scale them in the real world. There's also a sense in which Hawaii and Alaska, where we also have a strong partnership, are early markets who are seeing some of the early impacts of climate change and are places where we can actually roll out technology and learn things and get ahead of the curve before other geographies. So there are other wonderful geographies to also test and serve new technology, but we find that being in communities, being really close to customers has an enormous advantage for technology deployment and acceleration.
All right, well, aloha to you. We'll keep our eye on the Elemental Accelerator founder and CEO Don Lippert there. Don, thank you so much for joining us. Okay, coming up, we're going to talk about the future of Apple's automotive ambitions as the tech giant loses a key executive. That is next. This is Bloomberg. Let's Let's take a look at Tesla now. Shipments of its China-made cars to the local market rebounded last month despite the slump in total car sales in the country. Domestic China shipments for August doubled from the previous month to almost 13,000 units. Exports from the Shanghai plant, mainly bound for Europe, also jumped, bringing the total Tesla shipments to more than 44,000. That's an increase of 34% from July. And demand for EVs expected to continue to rise as battery prices fall. Bloomberg's Akshat Rathi explains.
When will electric cars become as cheap as their gas-guzzling cousins? On average, electric cars should be cheaper than gasoline-powered cars in the next 5 years. That's largely because the cost of batteries has fallen dramatically over the last decade. In 2010, the US Department of Energy set a goal that lithium-ion battery prices needed to fall to $100 per kilowatt-hour, down from about $1,200. For context, 1 kilowatt-hour is the amount of electricity needed to run an iron for half hour or a kettle for an hour. The price of batteries reached about $140 per kilowatt-hour in 2020, and it's set to fall below the $100 mark within the next 5 years. While that's a huge sign of progress, these are all average prices that hide a lot of nuance. The average cost of a car varies a lot from region to region. In North America and Europe, electric cars will reach price parity sooner than they would in Asia. The type of car also matters. For fleet vehicles such as taxis and delivery vans, we may have already reached price parity. For small, low-performance vehicles, electric versions may never be able to compete with their gas cousins. In that sense, $100 per kilowatt-hour isn't a magic number. The goal was more to set the speed of technology development needed to unleash the potential of electric cars. That it certainly has achieved. Every large automaker now sees its future to be electric. Even though China dominated the market for a few years, 2020 saw more sales of EVs in Europe than in China. Battery prices will keep falling for years to come. The chance that you'll choose an electric car next just keeps rising. This is Net Zero. I am Akshat Rathi. Follow us on your favorite platforms for more.
Meantime, the future of Apple's automotive ambitions is a little less clear with the departure of a key executive. Doug Field joined the company in 2018 to head up the tech giant's car project, but is now moving to Ford as its Chief Advanced Technology Officer. What does this mean for Apple? We're joined now by the one and only Mark Gurman. So, Mark, what else have you learned about Doug Field's departure and what it means?
Doug Field was Apple's car project, right? If you remember, he was the chief engineer for Elon Musk at Tesla, and he basically spearheaded the development of the Model 3, the Model Y, two of the most successful EVs in the world. He ran this Apple car project. He had an executive team under him, but he was the face of the project. He's the one who had clout with the automotive industry. He was the one running the show, and he just walked out after 3 years, right? What does that tell you, Emily? Well, it tells you that even he, in charge of the project, was not optimistic about Apple eventually shipping a car. Maybe he thought it would ship too long from today. Maybe he thought it wouldn't be successful. But imagine the type of money Apple was paying him, the amount of shares Apple was giving him, and what his legacy would be if he was the one who launched an Apple car. And he walked away from all of that to be the number 3 or the number 4 person at Ford. It doesn't make much sense to me unless he thought that the Apple Car 2 was too good to be true.
How deep is Apple's bench on the car project? How many other employees are dedicated to this?
They have an executive team of about 12 to 15 people running the car project. You have some other ex-executives from Tesla. You have the former vice presidents of drivetrain and interior and exterior design and autopilot self-driving software from Tesla. You have Erlich Kranz, who ran the electric car division or was senior in the electric car division many years ago at BMW. You have a few other Apple lifers on that team, and you have hundreds of engineers working on self-driving technology. But at this point, this Doug Field departure from Apple, the significance can't be overstated, right? This was supposed to be one of the grandest future ambitions coming out of Cupertino. And now you have the head of the project walking away for a legacy automaker, moving, halfway across the country to do that part-time. So this is not a good look for Apple or its ambitions, and clearly won't give much credibility right now to the project, and it won't stoke as much as excitement as it may have done for the people working on it. So it's to be seen what ends up happening to this project, if Apple's going to replace Doug Field, if they have someone else lined up, and what the future for this project holds. But the person in charge just walking away after 3 years, clearly, you don't have to hear it from me, that's not good news for an Apple car.
All right, Bloomberg's Mark Gurman will continue to follow that story. Thanks so much for that update. That does it for this edition of Bloomberg Technology. I want you to join us tomorrow for my exclusive interview with Jimmy Pitaro, chairman of ESPN and sports content at Disney. We're also going to be joined by Reshma Shaljani, CEO of Girls Who Code, and DJ and music producer and founder of the NFT-based music platform Royal, Justin Blau. I'm Emily Chang in San Francisco. This is Bloomberg.